What's up, everybody? Good afternoon. My name is Carl SanFilippo. In case you don't know me, I am the broker owner of RE/MAX First Realty and the RE/MAX First family of companies. And I am excited to be the moderator for our September watch party. This is a topic that's usually not talked about enough, in my opinion, in the real estate office. And it's one thing that I'm incredibly passionate about, and I know our panelists are incredibly passionate about, and that's real estate investing. I know one of my biggest motivations to become a realtor was because I wanted to become a real estate investor. So we are excited to share 3 seasoned investors and their experience in investing with everybody throughout the company. So thanks for watching. And a side note is we're so passionate about seeing other people invest in real estate that Olivier has really spearheaded an investors club. So it's open to anybody in the company. It's the first Thursday of every month at 10 o'clock. First Thursday of every month at the Cranford office. So it's on our training calendar. We'll send out some more information about it. But if you are an investor or looking to invest, this is a great meeting to go to learn how to source deals, how to evaluate deals. And we're going to unpack that a little bit today. So first and foremost is I want to thank our 3 panelists. We have Lenny from our Cranford office. We have Olivier, right? Olivier, yes. Olivier is from the Cranford office, and Joe here in the East Brunswick office have all taken time out of their busy schedule to share with everybody throughout the company about what they're doing to invest. So guys, I appreciate you doing this.
Thanks for having us.
Thank you, definitely.
So listen, I want to start it off. Like, when did you start investing? Before or after you became a realtor? Joe, how about you? When did you start investing?
I'm in my 19th year. And it was just about equal about when I got my license.
Okay.
I got my first investment property during that first year of real estate.
Nice. Was one of your motivations to become an agent, was the investing side of it?
It was more intriguing to me about the investment side of it than actually selling at the time, but right. I kind of grew into, you know what I mean? And I ended up turning the investment side into it probably a little bit more than I expected from the beginning.
That's good. Kind of how it happens, right? How about you, Lenny?
Well, I actually started investing, and because of investing, myself and my family, we got more into real estate, so therefore got licensed as well.
Right.
So initially, it was investing by accident, and then rolled right into the actual real estate agent portion of it. So
nice. Olivier, how about you?
So I got licensed to invest, but then got a bug of real estate commissions and the fact that I put very little money out and got these nice commission checks, and really spent my first 5-6 years just being a realtor before I got into investing. But initially I got licensed to learn about real estate so I could invest, but the real estate commissions kind of took over for the first 5 years.
Okay. So I think one of the biggest things people stumble upon is with real estate investing is, doing that first one, right? It's kind of with this where you're the most nervous, and it's like anything else. It's like the first time you go into a listing appointment. It's the first time. I remember the first time I brought a buyer out. Yes, I brought buyers out. I was so nervous to open the lockbox. I didn't want, but now it becomes habit. So Olivier, tell everybody a little bit about your first investment. Great. And how it went. Was it a success? Was it a failure? Was it a profitable? Because I know there's a lot of people's first investment, you might not even make money, but you learn a lot. Yeah, Tell us about your first investment.
Yeah. So my first fix and flip it wound up being profitable. I had tons of experience and I worked with investors, so I knew what to do, what needed to be done. I did spend a lot more time on that first one. I went and sourced every piece of material. I was looking for everything on sale. I'll never forget this. I used the sticky backsplash tiles instead of the real ceramic tiles because I was trying to save money. I did 4 mica countertops instead of granite, and I saved a lot by doing that, but it just took a lot of time.
Right.
And I remember my 8-year-old was maybe 1 or 2, and he was in the stroller at Home Depot. But I winded up doing well on that. It was a fix and flip, very simple project. I didn't need permits. Really hands-on. And the thing I learned the most with that first project was managing contractors.
Right.
It was the expectation, how to work with them. Their timelines are never really their timelines, and all the other stuff. But it winded up being a profitable first project.
Mm-hmm. How about you, Joe?
My first investment was a rental property, which I started out with some rough edges because, it happened to be in the city of New Brunswick where there's a lot of rules and regulations on rentals that I wasn't expecting.
I'm sure you learned quick.
I did learn pretty quick and learned what to do, what not to do. Went through the typical first-time investor jitters and prayed that it rented and stayed rented, and you know what I mean. And then as time went on, I got a little smarter about financing, et cetera, and turned it into what I have now.
And one thing I love about real estate investing, because Olivier said his first was a fix and flip, yours was a rental property. I think a lot of people might not truly understand. There's so many different avenues of real estate investing, right? So, Joe, explain to people what is more, and I know this, that's why I want you to share. What is sort of your strategy with real estate investing long term?
I actually, over the years, have only sold one rental property along the way. Because I did, after I got a little bit smarter at it, I would buy a house that possibly was run down. I know what it would rent for. And I would basically fix everything in the house mechanically, and because I don't want all the phone calls.
Right.
And I keep them for long term, residual income, et cetera. And, it takes, in the beginning, you have to be creative with financing if you don't have the resources to just write a check.
Right.
And you get better at it as time goes along.
Right. And there's a big saying in the real estate world to bury your properties.
Yeah.
What's it? Buy, rehab, rent, repeat. Refi, repeat. Yeah. This is how good I know it, all right? But so that goes definitely into that strategy. Lenny, how about, so Olivier, I know you a lot of fix and flips and you do buy and hold. Lenny, tell us about your first deal and sort of your investment strategy as well.
So, as I mentioned before, my first investment property was kind of by accident, or I kind of stumbled into it just by chance, because where I was in my life professionally, I happened to have time, and I was handy. My wife and I driving to our kids' school every day, we would see a rundown house, and we said, you know what, let's look into it. With no end game of what we were picking it up for, just because I had time and I was handy, and why not, right? So my dad and I actually rehabbed the whole place to the best of our ability, plumbing, electrical, carpentry, everything. And then we said, okay, now what? So we went ahead and rented it, right? Okay. So it was actually the worst thing we ever did, but the best thing we did also as a learning curve. Because I always use a term that I like short-term relationships now rather than long-term relationships, and that goes to say for that, like that, we had a tough experience with that rental, evicted and all that stuff. Rehabbed it again actually a few months, 6 months after renting it, and then sold it, and then turned a pretty decent profit. So he said, there's something here. Right. So then we flipped it and then continued on to others. But we quickly learned that at least at that time in life, for us, the best thing was to do the short-term relationships, just fix and flipping. Nowadays, I'm more so reverting into more buy and holds, just for longevity, and go after that strategy. But we flipped almost every property we've acquired.
I love that, right? There's no one strategy that's the right strategy. It's a strategy that works for you and during that lifetime. And one thing I say is great is you start with flips. You can use flips to build revenue to buy and holds. So I love that, 3 different strategies, 3 different ways, and 3 successful investors. So listen, the market's been tight the last few years, right? Inventory has been, everybody watching this knows, every agent that's watching this, it's been a crazy couple of years of inventory. What do you guys do, let's just say pre-pandemic or now, to find deals? Because, and I always tell agents, it's like, well, if I find a deal, I say, if you find a deal, you're going to find a way to finance it, right? Finding the deal to me is the number one thing you have to do in this business. Very true. Yep. And I always say, you find a good deal, you'll find someone who will help you finance it. You'll find something to do with it. So finding the deals is the true talent in the real estate investing space. And that's why I tell agents is like, if you want to become a real estate investor, you find a really good deal. You don't always have to sell it to an investor client. You can purchase it and you can start building your own long-term wealth through real estate. So Olivier, what are you doing right now to find deals in this current market?
So that's a good question. I get this often, and this is going to sound very boring to many people, but I still find most of my deals on the MLS. I am a creature of habit with the hot sheet, and I think that that's been my number one go-to secret sauce, secret weapon forever. And through the hot sheet, I know everyone looks at new listings, but the price reductions and the back on the markets, to me, are the little golden gems. When the houses come back on the market, usually the seller's frustrated. What seller's happy to go back on the market, right? No one. So once they're frustrated, that gives me an opportunity to go in and negotiate. Once they're doing price reductions, I know that there's some motivation there.
Right.
So that gives me an opportunity to go in and negotiate. Of course, the new listings are very competitive, but I found my little niche in the back on markets and price reductions. One of the properties I did last year, I wound up being a pretty good home run as far as a flip. I got from the MLS. It was on the market 14 days. They did a price reduction. And if you're doing a price reduction in 14 days in the middle of the pandemic when there's no inventory, there's real motivation there.
Right.
And I actually negotiated 20 grand off the price on top of their price reduction. And I do get some properties from wholesalers. So through signing up through different email channels and some networking things, I've met some wholesalers.
Olivier, I don't mean to cut you off, but somebody who's watching this video who might not know, what is a wholesaler?
So wholesalers are basically independent investors that are going out and reaching out to sellers, whether mailing, door knocking, cold calling, a lot of cold calling. I get a ton of mail from them. I'm sure you guys do, since you guys own property where we'll buy your home cash, we'll buy your home as is.
Every day.
Every day. Yeah. I get calls, texts, mail.
Oh, yeah.
So I have spoken to several or they've gotten me on the phone and I said, put me on your list, and I get emails, and every now and then there's a really good deal in there and I'll buy it from them. The terms are very strict for those that have never bought from a wholesaler. They usually want you to close right away. They're not the owner of the property, so there's assignment of contracts, which gets a little tricky. It's a little more complicated to deal with a wholesaler, but they have some of the inventory. So between the hot sheet, which still works, anyone want to challenge me on that? I'll show you several deals that I got from the MLS in the last couple of years, as well as the wholesalers. That's where I've been sourcing stuff.
I love that too, because when I was listing a lot of bank-owned properties, people would tell me, how do you get a deal on a bank-owned property? And I said, it's not when it's initially listed. It's when the deal fell through for the second or third time, and they tried doing finance deals and it didn't work, and then they take a cash or a hard money offer at a discount. So I agree with you 100% about that. It's usually not the first property day one. It's usually the property that's back on the market for the second or third time is where you get the MLS good values.
I get excited when I see those.
Yeah. What about you, Lenny? What about finding deals? Pre-pandemic, throughout your career, what have been good sources for you?
So pre-pandemic, it was easy peasy, really. Right off, like Olivier mentioned, right off the MLS.
Right.
Just putting some time into it. As you know, my wife, she's also a realtor. So she's on there all the time. So between her and I, just sourcing deals on MLS and just also relationships and networking within the industry, whether it's other realtors within our office, other offices, other markets even that may have different things available. So just keeping an eye out for that. And networking is definitely a big thing. Just having the relationships with different professionals.
I think letting people know too, you're in the business of buying houses and things like that, right? If you don't put it out in the universe, it can't come back to you, I love that. It's just like any other sales business, right? You're doing networking, you're getting referrals from other people, and that's how you build it. So that's great. How about you, Joe? How?
Same, pre-COVID, but lately I've been looking into expireds. Again, or back on the market.
Right.
I listed 2-family 4 weeks ago that closed just this past Friday. and or I'm sorry, the Friday before, I was their 5th realtor.
Wow.
Wow.
So, you know, you look at that on MLS, you think, what's the, you know,
What's going
what
on?
went wrong
Right.
with 4 prior realtors?
Yeah, what's missing?
So, you know, I went on the listing just to see what they were discussing. They had the house on for, say, $399 for 8 months,
Wow.
even in this market. So, but the long short of it is that you figure out what's going to excite your buyer's potential, because, you know, everybody in the world, all the investors, prices are way too high. People are seeming to forget the based rents, where it used to be
Way
here,
high, right.
here now. So when you put it together, and the house actually sold for $20,000 over asking price in 4 weeks, but, you know, I just had them do minimal things around the property itself. But it's you know what, it's a struggle, but it's a lot of extra work in this market. But to tell you the truth, you have to convince your clients, investors, you know, you're paying $25,000 more than you were a year ago. What does it equate to? It equates to 1 year's worth of rent. You can buy it now and get your $25,000 back, or you cannot buy and not have anything the entire
That's a great point. That's a great point. I mean, that's a great point if you're just an agent working with an investor, right?
To me, it becomes, I'm sure you guys already know that the rents have jumped.
Skyrocketed.
There's zero advertising right now to rent a property. There's a multitude of everything. You can pretty much name your, in your market, you can name your price. I mean, and it's convincing to, because, everybody has that old mindset. I don't want to pay asking price, and I don't want to do this, and I don't want to do that. But in the end, it doesn't scare me, because the amount of rent that's coming in right now,
Right.
I don't see the rents going down anytime soon.
Right.
I wanted to add, and ditto your point, Joe, one other way to source deals from expired listings that you mentioned. I got an expired listing once where I mailed the seller a letter, basically an offer. I knew the property from looking at the photos. It was in a town that I really wanted. I had something else near it. I mailed the seller an offer. I took off in my head 5% because they're not paying commission. And I took off another 5% because you were overpriced. So I took 10% off the price and mailed them an offer and just wrote a note. I actually got that property. I've tried this probably a dozen times, but I got that one property because it expired. So they were overpriced, and they gotta understand that. And buying it, selling it directly to me, they're not paying commission.
It's just so interesting when I hear you guys talk about this stuff, because just so much of this also just relates to like a real estate business, right? Prospecting and expired and, hitting people's pain points. That's why it's like, it just goes across the board altogether. And I know years ago, I had a lot of luck buying properties through some of the auction websites like the Hubzoos and the Zone.coms pre-COVID, because there was deals in there, but it was one of those things too. You also had to make a lot of offers to get some stuff accepted.
Exactly.
Right?
Oh yeah,
Exactly.
Put a lot of time into it.
If your clients are up in the air on whether it's going to bring in the numbers that I just had that, as a matter of fact, the buyer of that 2-family that just closed, I asked them to put a blind ad on Marketplace with pictures.
With the rents.
177 inquiries in 24 hours.
Yeah, sounds
Amazing.
So at that point, there's nothing more to sell at that point. They know that we're telling you this is what it's going to be.
Right.
So, I mean, I've been doing that for years, but now more so, because they just can't imagine, if they bought a rental property from any of us 10 years ago, get a few calls here and there. Sometimes like me, I've had people in some of my houses 12 to 14 years renting, never moved. We're in a different world right now.
Right.
So it's not like it was back then. You know what I mean? You can pick and choose actually who the tenants actually are.
Right.
And the great thing too is I had to overcome the hump of the prices going up. Like, wait a minute, I'm paying how much for a two-family now?
Exactly.
A year and a half ago, I bought the two-family for this. But then ultimately, you look at rents, as Joe mentioned, and rents are up so much, you're like, wait a minute, the tenant's paying for this, not me. I don't mind the extra 30, 40 grand. The tenant's gonna pay for it because the rents are so high. So that's also like a learning curve of adjusting.
It's a huge learning curve that it takes the agents, to explain it to the investors. Like I said, you want to get your money back in a year's time and have the property at something that, goes into your mind where you get nothing.
Right.
Yeah.
Because there's, going forward, we don't know. Prices could go even higher in another year. We don't know.
And the rates.
Exactly. The rates is another thing.
And I always say, talk to someone who's owned real estate for 20, 30 years. They never say, I regret buying that property, right?
No.
What do they always say? I wish I bought more, Because look at what's happened with crypto. Look what's been happening with the stock market. Talk about things you can't control. Yeah, you can't really control if the price in housing goes up and down, but in the long term, if it's managed right and you're getting the right rents, you can control your cash flow and what you're doing with the property. That's why I'm so passionate about real estate investing, because we hear so many of these other distractions. And you look what happened. I remember a few years ago, cannabis stocks were the big rage, right? Or the tech stocks were the big rage, and they all burst. But what's been tried and true to all these years, from my grandfather to his father, is buying real estate and keeping it. It's definitely worked. No, a lot of great nuggets in this. And what I want to know next is, so talk to me, Lenny, are you a solo investor? Do you partner with people? Do you do a mixture of both? Are you totally against partnering? Kind of break that down a little bit for us.
So in regards to partnership, my second project, I did a partnership on that project. It was a 50-50 split. So we did that just to better fund the deal, et cetera. And it went great. But as you do more, I think it gets easier to fund them yourself, and you find different avenues of financing, such as hard money or cash or whatever it is. So I find myself doing very little partnership currently. So unless I'm gonna go and significantly scale, where I'm doing 40 houses or something, nuts a year, I'm able to handle it and don't need to partner per se. But I do always welcome the opportunity to work with new investors or just a new person that's like-minded, where we can move to the next level.
Right.
I just haven't stepped into that next level yet, where I'm doing 40 houses, a year or whatever it is. But mainly I've been doing solo investing, to your point.
And in the beginning, you had partnerships that helped you get moved over to the solo spot.
Yeah,
right?
Well, initially we did some creative financing for the first deal or two. But the second or third deal, we ended up doing a partnership to help with funding. But the first ones were solo, but then we stepped, I don't know if you want to say regress, because that's not necessarily a regression of things, but we did partner up on the second or third deal just to easier flow into things. I currently have another one in a partnership as well, and it flows great. Obviously, it alleviates a lot more on your plate, and it frees you up to do more, more projects or different things. So there's definitely different positives to partner. So
you know what I've taken out of today? We could do a whole nother session just on financing these investments, right? Talk about all the different creative ways to do it. That could be a whole half-hour topic itself.
I thought you were going to say syndication.
Oh, yeah, syndication. Yeah. I mean, there's so many different ways to finance these deals. I feel like too, lately it's been getting, like I said, you find the deal, you'll find the financing, right? So if you ever see a deal and you're worried about how do I finance this, reach out to people who have done it and ask them what you should do. And there'll be a way, if it's truly a deal, you will find financing and it won't be an issue. How about you, Joe?
Solo all the way from the beginning. As far as the financing goes, there were some bumps in the road, obviously, and until I really knew and figured it out. And then I discovered that there was a a bunch of equity in my primary residence, which I took a HELOC out on. Actually, it's an equity line. And it softened the blow on me going forward, no closing costs and this and that. But I've taught this, to my clients, when you handle, 30 landlords, et cetera, whatever it may be, and who's buying, every one of us who's in this business and does it successfully, we're proof right there. They don't need any more. They don't need any more assistance to say, hey, he did it, I can do it. And it's encouraging to them. You know what I'm saying? But most people get a snag on the financing. They and like the rates right now, they're not very welcoming. But listen, in the 90s, where people were paying 10, 11%.
Yeah.
Everybody got spoiled. But something, it's still it's the cost of doing business, no matter how you look at it. Granted, the rents are up, the prices are up, but everything's relative in the end.
Right. It's just knowing your numbers.
Yep.
It's knowing your numbers.
Yeah, I think a lot of folks, just to add to what he's saying, get caught up mentally. So it's more of sort of a mental thing. Can I get financing rather than can I actually get it? If you go after it, like Carl says, you can find it. But a lot of times it's a mental block or a surety thing.
I see some people, sometimes that people will use that as a reason not to go after it, right? They're so worried about how to finance it, they're not worried about finding the deal. Yeah. But I always say that, right, the biggest key to being a real estate investor is you find the deal, you're going to learn how to be an investor. Yep. What about you, Olivier?
So I've done a fair share of partnerships and a lot of solo deals. It just kind of depends. I started out actually just being a silent investor with my cousin who was flipping properties, invested in 2 properties, just kind of watched them in the background, and then did the first one that I spoke about. Since then, I've partnered with contractors. That's been good. Don't have to manage any of the construction part. So I had a contractor we did 3 flips together with. That was awesome because I never had to show up. And then he kind of had some struggles with his business, so I started doing them on my own. To Lenny's point too, it's more work doing it on your own and the resources. So I found that with partnering, it's great because all my resources aren't tied into 2-3 projects.
Right. You can do more.
You can do more. So, I've been frustrated where I've had my funds tied into a couple of projects and I find 1 or 2 good deals and I'm like, oh. And then what I've done is I've reached out to partners. Hey, here's a deal, fund it. I'm tied up right now. And that's always worked. So don't be afraid to go after partnerships, especially when you don't have the resources. A piece of the pie is better than none.
100%.
So I think people look at, I just want to make all the money. No, just look at partnerships as long as you partner with the right people. I've always had in my partnerships, what's worked really well is there's a definition of who's doing what, who's responsible for what, my role, their role. Okay. So there's no overlap and there's no questions or this isn't done. So as long as you define it up front and you guys know what you're responsible for, not just the financial payments if it's hard money, but also the construction, the insurance, who's taking care of the lawn care. As long as it's defined, partnerships work.
Yeah, no, I can't. I agree too. I partnered a lot like Lenny. In the beginning, I partnered with some guys just because they had the financing and they had the experience, and it took a lot of that anxiety away from me because I never done it. Like, let me partner with them, even because I found the deals, but I was like, I'd rather get a piece of something and learn. Right? A lot of it is the education. I was thinking about, I spent hundreds of thousands of dollars, not even on my college education, just on business education, right? So just partnering with somebody, and somebody always gets worried about, like, well, what's my split's gonna be? What's my split? What are you gonna learn, and what's your long-term return gonna be on that? Because even if it's a 30% return, or a 25% return, and you're hands off and you're learning and somebody's mentoring you and taking that time,
priceless.
That's priceless, right? Because then when you're ready to do it on your own, you're gonna have that confidence. And when you breed that confidence, and it's like the real estate business. I always tell agents, this is a momentum business. You start getting momentum, you keep building on it. And same thing with real estate investing. It seems like if I find one property, I usually find 2 or 3 right after because it's like a momentum thing. So, we're going to ask one final question. Listen, I appreciate you guys doing this. I know I learned a lot. It's not something that's talked about enough, in my opinion, and I'm sure everybody's watching. If you're watching, I hope you're enjoying it. But last question, Lenny, what are the top 3 things realtors should know or do regarding investing?
Well, first thing I would say, I always use this analogy in my head, or this kind of pumps me up or kind of backs me up, I guess. I would say, what's the worst that can happen, right? So just use that mentality for a lot of decisions. Don't be impulsive, obviously, because you got to make a concise decision, but just kind of, be very like analytical. Like, what's the worst that can happen? Really, let's say in a flip property,
Right.
you lose some money,
Right.
and that's as far, and that's it, let's say, right? So that's one thing I would say, kind of have an open mentality and be more willing to jump into it, and it usually works out. And if you're a realtor, you're in the industry, especially in our offices, you have resources.
Right.
I'm more than willing, and I'm sure we're all more than willing to always be a point of resource and just share.
Yeah.
So that's one big point.
I love it.
And what was...
It's 3, but if that one was a really good one. So don't worry if it's 3, but it's right. No, you're right. You can't, even if you lose a couple dollars on the first one, the education you get through the process is going to be worth more than the money you lost on that first one, right? Because then you're going to know what to do on the second one where you don't lose it.
It's like an internship.
It's like an internship.
Exactly.
That's a good point.
Some of them are paid, some of them are not, right?
Yeah. And even if you're looking to do it now, reach out to people. I'm sure there's people around that are in the middle of construction, a project. Just ask if you can come see it. Ask if there's anything you can do to help. And people are always willing to share for people who appreciate it.
Yeah,
right.
Correct.
How about you, Olivier? 3 things.
3 things.
Or one really good one.
I'll give you as many as I could think of. I would say 1, start with ARV. Know your after repair value. Because if you don't know what it's worth on fixing and flipping, or you don't know what it's worth to rent, you're not going to be able to analyze and notice deals that are right in front of you. So whether it's a buy and hold or you're fixing and flipping, you have to know what it's worth, what the apartments could go for, because if the rates are higher, the prices are higher, but it rents for X amount, it still works. But if you don't know what that X amount is, you're going to pass on a good deal because you're just afraid of the numbers. Same with fixing and flipping. If you know the ARV and you see a property, you know that there's meat in there, and that's a good deal. So I would say 1, learn your ARV. 2, I think with fixing and flipping, the hard thing becomes contractors. I think finding good contractors, learning how to manage contractors. One quick tip, I always like sharing this, that I learned indirectly. This is not the purpose. I started putting alarms in properties because I was flipping in, sometimes urban areas or just areas where there were abandoned homes. And I learned through putting security in, I knew when my contractors were showing up because they had to turn off their alarm to get into the house. So when 2 days passed and my alarm wasn't deactivated,
right.
I was able to call my contractors. Hey, you're not showing up. Oh yeah, we got busy. And it's like, no, I need you there tomorrow.
Right.
We got to keep this going.
It's a great hack.
Yeah. So it's and I use Simply Safe's $25 a month. They're not sponsoring this, by the way.
Sponsored by Simply Safe.
But it was amazing because I learned indirectly how to manage contractors and whether they're showing up. And I had some tell me, yeah, we were there. No, the alarm didn't go on. So you were not there. Oh, you know what? My guys didn't show up. But managing contractors, I think, is one of the tough things. But if you can learn that will help. So what I say, ARV, contractors, and I think just sourcing the deals. To your point, Carl, if you can source the deal, the rest will follow. The money will find you, or you can find the money. So sourcing deals, I say be consistent. I still believe in the MLS. It still works. But, be consistent in trying to find deals and always keeping your eyes open.
Right.
So if you know your ARVs, you have the structure and the contractors, and you're always looking for deals, it all come together.
Joe, how about you?
One big thing that I find is helping successful, realtors and investors is that I stick with the people after the sale. It's not the closing and then they don't hear from me. I'm checking on the property. I'm seeing what they're doing. Try to cut off some mistakes before they make them that I already know. And in the end, you're building your business that way because guess what? If it's not profitable, whether it's a flip or a rental, they're not calling you again.
Right.
Yeah.
So I give them some of my resources also, contractors, lenders, etc., and stay on top of it. And my phone's always on. I won't, if they call me, and I'm on the phone, I immediately call them back, because to me, the service that we offer with knowledge is priceless. I don't care what anybody says. If you walk away after the closing, it's over. You'll never hear from them again.
And it must generate a lot of referrals, right?
You hope.
Naturally, yeah.
Yes.
Yeah.
And you know something though? The truth be told is though, they're more at ease with experience, knowledge, everything that you bring to the table. They don't feel alone, especially the first timers or second timers. They don't feel alone. You're in it with them.
Yeah.
You know what I'm saying? And that's what group, you know what I mean? And even when they have people over at their properties, they chime in on the questions, and you know what I'm saying?
And I think the new wave of buyers coming in, and millennials, they want to be real estate investors. I think real
Big
estate
time.
investment's talked about
Big
a lot
time.
more than it used to be.
Big time.
I think it's a huge segment of the market that if you're able to service, that you can create a lot of repeat business from. I'm not obviously I'm hosting the panel, but I want to chime in is two things I would look at doing too is, I really started listening to the Bigger Pockets podcast. It's a great podcast if you're driving around. I would tell you start from the beginning, don't start from the end and the old episodes. I learned a lot about investing and financing from listening to that podcast.
Yeah.
And I used to religiously listen to it, not as much anymore, but I learned a ton from that podcast. Another really good real estate, and they even have a book about buying rental properties and stuff that's really good. And I also, what changed my mindset was the fifth time, took me 5 times, was I read Rich Dad Poor Dad by Richard Kiyosaki about buying rental properties. Those two things really helped change my life. So I just wanted to pass that on to everybody that's watching.
You recommended it to me when we first met, and I think I had like 6 flips going on at that time. And you were like, dude, you need to read Rich Dad Poor Dad. I immediately read it, and it helped change my mindset. That's a great book.
Yeah, it's a great book. Like I said, you never meet anyone who's owned property for 20 years and said they regret it.
Yeah.
So again, thank you guys. I know I took stuff out of this. I'm sure everybody watching did. Reminder, the first Thursday at 10 a.m. at the Cranford office, we have our investor club. We'd love to see you there. We talk about different things from finding deals, financing deals. We basically go deeper from what we were doing today. So it's a way to build on that. Again, first Thursday every month, 10 o'clock. Guys, I just want to say thank you again for
Thanks
doing
for having
this.
us.
Yeah, man, it was great. And keep an eye out for our next watch party next month in October. See you guys.